Welcome back, and joining us on the show now is Saif Mukadam. He's research analyst at ICICI Direct. Saif, hi, good to have you. Wishing you a very happy 2025. And I was reading your report on outlook and commodities for 2025, and I do want to start with gold first. And we've seen a lot of global banks and brokerages now kind of revise their outlook for gold, which is not really on the higher side, 3,000 max, and that too people expect it not to hold around those levels. What is your sense?
Yeah, hi. Good afternoon, everyone. As you have mentioned, like a lot of people are not expecting more than $3,000 in gold. See, what we are expecting right now in the gold is we expect gold prices to rally to 85,000 on MCX, and on the international side, we can see to 2,900 to $3,000. The major reason behind this is the safe haven demand due to heightened geopolitical tensions across Middle East and Eastern Europe. And second thing is the potential trade war hurting economic growth. So there will be a demand for the safe haven. Secondly, the major central banks across the globe are expected to continue with their monetary easing as the inflation is touching near their central bank targets. Thirdly, the central banks are likely to continue with their buying spree to diversify their reserves for the strategic reasons. And fourthly, like we expect the the demand for the ETF to increase to kick in 2025 as investors will buy gold as a store value. So these are the major reasons why we expect gold prices to move up. But yeah, there is a headwind for the gold prices, that is the strong dollar, due to the proposed Donald Trump policies are considered to be inflationary in nature. So that will somewhere prevent Fed from cutting interest rate at the same pace which it did in 2024. So that is the major headwind for the gold prices.
Sure. And even as we speak, rupee is at an all-time lows yet again, 85.85 on your screens there. Saif, whatever we buy in sense of commodities in India, and since much of it is dollar denominated and we're price takers there, would you say the kind of gains that you're anticipating in gold and silver globally, India perhaps would be looking at higher gains than that? We've seen that in 2024 in the last quarter. You've spoken about gold already. What's your sense on silver? There was this whole narrative that silver perhaps could outdo gold. Do you see that happen in this year?
Yeah, we are expecting silver prices to outperform gold this year. The major reason for the silver to move ahead or rally ahead is still 110,000 levels in this 2025 year. The major reasons for silver to move ahead is the market is expected to remain in deficit for the fourth consecutive year. Secondly, the demand in the industrial sector is increasing rapidly due to the growth of green economy applications, particularly in photovoltaic, EV, then your rapid adoption of AI technologies and investments in the infrastructure such as charging station. So these are the major reasons why the demand for the industrial sector is increasing. Secondly, the investment demand may increase due to monetary easing across the globe. China's stimulus package is expected to come up in 2025, and elevated geopolitical tensions will increase the demand for the safe haven. And we are expecting the gold-silver ratio to go below 80 as we expect silver to outperform gold in this year. And on the international side, if you go to see, the silver may rise till $37 to $38. And on the MCX, I've already mentioned $110,000 rupees.
Sure. And within metals as a sector, I mean, I do understand these are very uncertain times, and we will understand on what the US president, when he takes office on 20th of January, does, and how will the other countries react and retaliate to that perhaps. How would you look at metals as an overall sector then?
Okay, in metals, we expect the copper prices to remain under pressure. We expect it to come down till 690 on MCX. The major reason behind this would be the demand concerns from China. There will be a demand concern from the China because we are seeing that the Chinese economy is already facing the big domestic consumption due to prolonged property crisis and deflation fears. And Donald Trump victory has added to the more concerns because of the threat of tariffs on the Chinese products. In 2024, if we see, the most of the growth in the Chinese economy was due to the exports, was the main source for that. And if the tariffs have increased in 2025, then it will impact the economic recovery in China. So that will be negative for the copper prices. Secondly, the market is expected to remain in surplus, and if you see the warehouses, they are elevated, signaling well-supplied market. So this will be a major hit for the copper prices. it would prevent the sharp decline in the copper prices may be prevented if China comes up with stimulus packages which are more than the expected, and we have to see how it has been rolled out. What kind of measures does it come back? So this is the only which can prevent copper from going sharply downside. Otherwise, the copper prices looks to be on the downside note. Whereas on the other base metals, if we see lead and zinc, we expect it to remain on the downside note, majorly because of the market is expected to remain in surplus, and the elevated LME registered warehouses inventories are elevated. So that will have a negative impact on the lead and zinc. Whereas on the aluminium side, we expect the aluminium prices to remain a bit on the positive side because the market is expected to remain in deficit, and the aluminium inventories are also declining. So that will be a bit supportive for the aluminium prices. So we look aluminium to go till 280 in this year, 2025.
Point taken. Saif, a quick final last question, and this one is on crude oil prices. While last year wasn't so great, but this year we're already up by 4% right now. Are you looking at further gains for the rest of this year, or you think oversupply would start to weigh on?
In this year, we see crude oil prices to remain in the range of around $60 to $85. We expect crude oil prices to correct back. The major reasons would be the market is expected to remain in moderate surplus, and again, there is a demand concerns from China as well, because we are seeing that there is an uncertain economic outlook for the China. So the demand concerns would be there from China. Secondly, the market is expected to remain in surplus despite OPEC being dealing its production increase. Thirdly, the OPEC spare capacity is sizable. So even if there is any event of disruption, they have the capacity to prevent the market, protect the market during such kind of situations. And the potential Donald Trump second term with the trade war would have a negative impact on the economy, hurting the demands.
All right,
so
Saif, thank you so much.
Yeah.
All right, Saif, thank you so much for joining in, and wishing you good luck for the rest of the year as well. Manisha, thank you for joining in as well.